Hooty hoo, all my stock market gamblers. Welcome today. What is today? It's a Tuesday. Anyways, December 1st, the start of a new month. And the stock market is off to the races. We're up about 400 points right now. Opened at 300, just kept going up. Got up almost 500, I think, before we started to pull back a little bit. Dow Jones over 30,000 again. Bitcoin still trying to reach that 20,000, not quite there yet. What I want to talk today about is the invisible stock market crash. Now, as you may notice, the stock market keeps going higher, and people are expecting it to come down. People are expecting it to actually crash. People see the real economy and they say there is no way that the stock market should be this high. Now, what they're not understanding is that we're not betting on the economy anymore. It doesn't matter what the economy does. 50% of the people can be out of work, okay? Not a problem, as long as we continue to print enough money to prop up the market. Now, you got to understand the value of the whole stock market in the U.S. It's about $30 trillion. $30 trillion. Now, just last year, we printed somewhere between 5 and 6 trillion to keep it propped up that high, to keep it from coming down. Now, if, for example, the stock market's worth 30 trillion, if we decided to print another 30 trillion and put it in the stock market would instantly go from about 30,000 on the Dow to 60,000. And they could do that tomorrow. We can't really stop them. It's called the Federal Reserve. They have unlimited power. They don't have laws they abide by anymore. Anything can happen. And I do think we're going to get to 60,000 on the Dow Jones in the next 4 years, because we're going to be printing about $5 trillion a year, maybe $6 trillion, and that's going to take us right up to the 60,000 level. Now, how's the real economy going to be doing? Well, the real economy is going to be doing terrible. The homeless people, it's going to be terrible. When you go to the grocery store, your food prices are going to be astronomical, if you can still get food. A lot of people aren't going to be able to afford food. A lot of people cannot afford food now. The food lines are getting incredibly long. There's a boom in food lines. I mean, there's a boom in homelessness. This is where the real boom is. All right, so how do we solve the problem? Well, that's the problem. No one wants to ever feel pain. No one wants to feel that, that the stock market is going to go down. If the stock market is going to go down even a little bit, people don't want to feel that pain. It hurts their 401k. It hurts their property values. Houses, whenever they go down, people don't want to feel that pain. But we have to find out where prices should really be. Right now, we don't know where prices are because there's no price discovery mechanism. There is a lot of zombie companies out there that shouldn't even be alive, except we keep giving them more and more and more money to stay alive. It's called credit. Credit is unlimited if you're in the stock market. If you have a corporation, you can go to the government and get all the money you want. Basically free. Maybe they charge you 1%, but if you can't pay it back, that's all right. Just forget about it. We'll call it a grant. Look, we have to decide what we want in this country. Do we want to have a stock market and a housing market that is just propped up with fake money? Yes, we can keep printing money. We can keep printing money unlimited. We're the United States of America. But what does this cause? What it causes is everything else to go up in price. Now, what a lot of people don't understand is there can be a crash in the stock market, and it's an invisible crash, though. It's an invisible crash. Look, the Federal Reserve is going to print enough money so this stock market never comes down. They're just going to do it. Take my word for it. If I'm wrong, I'm wrong. But they're going to, every time the market has a little decline, they're going to jump in with new free money, free stimulus, printing of money. Okay, so the stock market can stay at 30,000. It can even go up as high as 60,000. But can there be a crash at the same time? Well, what if you have a dollar bill and that dollar bill can only buy you, let's call it, it starts with half, okay? So right now you go to the supermarket, a loaf of bread is $5. You go there right now and you give them $5 and you get a loaf of bread. But what happens when next month you have to go in with $10 and they're for that same exact loaf of bread? Well, your purchasing power got cut in half. But at least the stock market didn't fall. The stock market's still up because they printed enough money to keep the stock market up. But they printed so much money that your dollar bills are worth half of what they are. Now, this has been going on in the Federal Reserve for, well, they started about 1913, I believe. And your money has been devalued ever since. Now, look at how do they keep houses propped up? How do they keep them propped up? They keep them propped up with low interest rates. Okay, so we got low interest rates. Do you know the Federal Reserve owns 1/3 of all mortgages? Because no one else wants to own a mortgage that's at 2% interest for 30 years. The only buyer of that is the Federal Reserve. So they go, we'll take all that, we'll take all that, we'll take all that. And they throw the money out there. Okay, is that good for the housing market? Well, it keeps the prices high. Houses cannot come down to where they're supposed to be. Now, if you don't mind paying $1 million for a house, that's fine. But wouldn't you rather pay $500,000? Well, if you own the house, you're saying, no, I want them to go to $2 million because it's my house. I want the prices to go up. And I get that. I get that. No one wants pain. So we keep printing money, keep printing money, keep printing money. Now, anyways, let's talk about retirement. Retirement. When our parents went out and they worked a job and they saved money and, well, let's say they saved up $1 million for their retirement. Over the course of their 40 years of work life, they saved $1 million. All right, well, that's great. They could put that in the bank and they get, about 10% interest. And that 10% interest would give them $100,000 a year to live on without touching their principal, right? Well, let's say you go to work now and you save that $1 million, which is a lot of money, but that $1 million right now, you know what you get in the bank? I mean, maybe you get $5,000 for a year. You can't live on $5,000 a year. That's why you're not going to retire. Well, people say, well, I got a pension fund. Well, I got news for you. Pensions are in trouble. They're all underfunded. I'm not sure they're going to make it. I know all of them will not make it. Now, will they get bailed out with the free money, with the printing of money? Maybe. But pensions need to get a 7% return, and they can't do that. So they're now like me. They're now gambling in the stock market, but some of them are losing. Some of them are not making the money. So the pensions are not going to be able to pay your money for retirement. That's for the lucky ones that have a pension. But I don't think the pensions are going to be there much longer. I think this is all going to come down as long as we keep printing the fake money. Now, what's the solution? What's the solution? You got to get back to real money somehow. Somehow you got to get back on a gold standard. We got taken off the gold standard a long time ago when Nixon defaulted on it. We got to get back to it. A lot of people say, no, it's impossible. Maybe it's impossible, but we got to try. We got to try to get sound money where you just cannot print unlimited money. Now, if they just stop printing money, that would be fine. That would work. But what happens when they stop printing money? Well, stock market goes down. It's going to go down a lot when that happens. It's going to go down a lot, but I don't think it's going to happen. What happens to your house when they stop printing money? It's going to implode because, well, there's not going to be mortgages. Mortgage interest rate will go up when they stop printing money. You'll start to get money on your savings accounts when you get in the bank. You won't be robbed of your savings. Fake money, printing of money is just a terrible thing, and it's not going to play out well. I know everybody wants stimulus packages. Everybody wants free money. I want free money. But free money is not the answer. It's not the answer. It's not the answer to keep printing and printing money. We have to get back to what's called sound money. Sound money. Do you know, that's called 200 years ago. Silver was real money. Gold was real money. We went to this fiat system where you can just make as much money as you can make toilet paper. And right now there's a rush on toilet paper again. It's amazing what we do in life. But we got to get back to sound money so we don't have this invisible stock market crash. Yes, you can keep the stock market up here so no one sees the crash, but the real crash is in the financial system where your dollar is just going to zero. We've already wiped out about 97 cents on the dollar of every dollar you have. 100 years ago, a dollar was a dollar. Today, that dollar buys 3 cents worth of goods and services. Fiat system is broken, and you're going to notice this in 2021. You're going to notice this a lot. You're going to notice your value of how much money, your purchasing power of your money, it's just not going to be there anymore. We have to stop printing money. We have to. There's no other answer. We're going to break the system. Yes, it could be an invisible crash. Everybody's waiting for the stock market to drop like a rock. And if they stop printing, it will drop like a rock. But I think it's going to be an invisible crash. I think they're going to keep printing, and the stock market's going to stay where it is or even go up to 60,000. 60,000 on the Dow. That's what I'm saying in the next 4 years, because they're going to keep printing this money. And you're going to feel rich because you have all these dollars, but you're going to be loading up a wheelbarrow with them just to go buy your groceries. That's what they did in Germany. They brought a wheelbarrow full with currency just to buy food. Do we want to get to that point in the U.S.? I hope not. I hope they stop printing. Anyways, that's my rant for today. I know it's probably not what everybody wanted to hear, but it's what I had to get off my chest. And I hope that this makes sense to you as to why the stock market is not going down, why we're going to just melt upward. And we're going to melt upward for the next 3-4 years. As long as they keep printing money, I'm calling 60,000. 60,000 on the Dow. That's how much money we're going to print. But I'm telling you, getting to 60,000 is really the invisible crash, because your dollar that you have now is going to be worth a dime. Your dollar is going to turn into a dime. But market's up. Market's up. That's all I got. Get out there, do some trading today. We're way up on the stock market right now, and it's probably going to, we'll see. I think it's going to be a little volatile going into this week. I think we're going to get some volatility going. I think we'll get some up and down action, but I do think we're going to melt up higher as long as they keep printing, going higher. I'm Tall Mike. If you like this, give me a like. We'll talk again tomorrow. Subscribe so we can. I'll see you all then. Bye-bye.